What's happening, y'all? The trading week is over. I hope y'all was making profits last week, but a new week starts on Monday. Today is Saturday. I'm gonna give y'all some trading education and a possible play for Monday, and I'm gonna give y'all another one tomorrow on Sunday, like I do all the time. If you're new to the channel, make sure you like and subscribe. Try to get this video up to at least 200 likes. But now I'm gonna get into the homework. So with Google on the 15-minute chart. It's a 5-minute chart. Google on a 5-minute chart, we got a double bottom. Now, when you see the double bottom, as you can see, a double bottom usually hits at a level of support. So it hit the level of support, it went up, it came back down. Now that's confirmation that it's a double bottom. You usually don't get into a double bottom till it breaks that peak, in which it did, so it continued to go up. But outside of that double bottom, we also got a bull flag. So we got the double bottom and the bull flag in the 5-minute chart. We clean this up, but it's something else I like. Usually gaps get filled within a day or 2 days. And what I mean by a gap is on this day in pre-market gaps are created in pre-market. Before the stock market opens, there will be a little movement on the stock. So before the stock market opened, this was probably a day or two ago, Google was going down. It was going down and the stock market opened 9:30 right here. That formed a gap. It did a gap and go, which is usually when a gap is created, the stock continues to go in that direction. Now, sometimes it may only go in that direction for just one candle, like it did right here, and then immediately start to go up. So you could have did that one play, just trade that one candle and been good. But it didn't cover that gap in the same day. It didn't cover that gap in the next day. So to add additional confirmation to my trade, to the trade on Google on Monday, I'm looking for this gap. This gap is right at a level. This gap is right in the area of resistance, right? So about 134.80 would be the first place where I would be considered getting out at. I feel like the stock should go up to at least 34.80. There is a gap a little higher, which you can't see on the screen, but that's the level of support and that's closing the gap. So that's my first level. That's the first level of resistance, and it closed the gap. There's also actually a level of resistance sooner than that. This looks like a level of resistance right there. And this looks like a level of resistance too. Now, how am I identifying these levels of resistance? Is the stock touched that area multiple times and came back down. A lot of the times it'll break through resistance and continue after touching it multiple times, at least 3 times. This time it looked like it touched it about 4 or 5 times. So I expect it to go through that level of resistance. I expect it to close the gap. There's another gap up here a little further, so it should close that as well. So with these levels of resistance, if it goes up in pre-market, it's already above that level of resistance. So you want to look for it to go through this one and take profits here. If it continues to go through this one, it's probably looking to close that other gap. But play your exits and entries by the levels of support and resistance. Sometimes all you're going to get is one bullish candle. You get in and get out on that candle. And if you still got money to use, then you could do the trade in the opposite direction, making profits in both directions on the same day. All right. Now, let me go to the daily. Let me go to the daily chart. So on a daily chart, the only thing I really look at on a daily chart is a singular candle, right? This was the last candle on the day, which was a bullish candle. So that means that the stock market is at least the stock is at least should be trending bullish for the next day because of that bullish candle. It's a lot of body on that bullish candle. So I got all the confirmation. I got all the confirmation that I need. But before I get out of here, I want to go over an indicator. I might go over different indicators, or at least the ones I use in my next couple videos. So the first indicator I'm going to go over is the MACD indicator, which is this right here, the MACD indicator. And I'm going to read the definition for y'all. The MACD indicator is a moving average convergence divergence. It's a trending following momentum indicator that shows the relationship between two moving averages of a security price. Traders use the MACD to identify when bullish or bearish momentum is high to identify and exit points of trades. So let me show you how that looks right here, right? Hold on, let me get out of the daily chart. Let me get out of the daily chart and go to the 5-minute chart. I feel like this would be a little better for explanation. All right, so on the 5-minute chart, you see the MACD indicator down here. There is a line going across here on the MACD indicator. If it's above the line, it's green. If it's below the line, it's red. Above the line, green meaning bullish, red meaning bearish. That the stock is trending downwards, right? So if you look at the MACD indicator and you look at the chart, there's relation, right? So there's relation. Over here is bullish. The stock went up a lot there. Then the stock came down. Stock came down here. It went back up. It was green here. Now, another trick with the MACD indicator is if you notice, when the MACD indicator crosses, right? Like it crossed right here, the stock was coming down. It crossed right here, the stock was going up. It crossed right here, the stock was going back up after it crossed right here, and the stock was going down. So the MACD indicator is a nice way to see, you know what I'm saying? You see it again here. It crossed, changed directions. It crossed, changed directions. So it's a little iffy right here. Now it can get real close and not cross, which I expect it to do, but they're only indicators or confirmation on what you see in the chart. You read the chart first, and the indicators are confirmation. But that's Google. That's Google. If you trade in Google, I'm gonna do another stock tomorrow. Y'all make sure y'all get this money, man. Don't let the markets take your money. Get in and get out. Don't stay in all day. Get money in both directions. And most and foremost, y'all make sure y'all like and subscribe.